In this video, I will be speaking about Euro GBP. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. At the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong area of previous monthly resistance turn support here. Now, as we're testing previous resistance turn support, we could expect more bullish price action to be created away from this area. Dropping down on the weekly, what do we have? Now, from a weekly perspective, things look quite complicated because we have a market which is currently bounded in between resistance and support. In fact, what we can notice is that this area was acting as previous support here. It is once again now acting as support. In this area that was acting as resistance here, it is once again acting as a resistance area exactly here. So on the weekly, we have a range-bound market. Dropping down the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about Euro GBP a few days ago when the market was here. I explained all the reasons for which we could expect this rejection to the downside. And that is exactly what the market has now given us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, now that the market has actually gone all the way down and reached this previous resistance turn support, where we could be looking for the next potential move. Now, before we continue here with analysis on the daily, the euro is getting strong, the GBP is getting weak. Now, in a situation like this, we don't know if the market here will continue being below the weekly resistance or not, because we know that all this area is resistance on the weekly, as we have previously identified. Until the market will remain below this area, it can easily continue being inside of the weekly range that we have previously identified. However, if we actually get a break above that range, which would mean also a break above this previous daily resistance, which at that point would become support, after the break on the retest of this previous resistance turn support, this would be previous resistance turn support both on the weekly and also daily time frames. So we would have confluence of support here, meaning that we would have very good probabilities from here to see a potential rejection to the upside. So if we actually get the break on the retest, how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily is from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.